Welcome back, everybody. Today we're doing a deep dive into Satin Creditcare Network Limited. It's really pretty fascinating to see a company not just kind of, surviving, but really thriving in what's honestly kind of a difficult economic climate. They're expanding, they're reaching further into these rural areas of India, and they're really using technology in some very interesting ways to make sure that financial services are reaching those communities. So we are going to be breaking down Satin Creditcare's second quarter results for fiscal year 2025. And you have given us quite a stack of information here. We've got financial reports, we've got presentations, we even have board meeting notices. So,
Yeah, what's really, I think, impressive is how Satin Creditcare is managing all this growth, this really impressive growth, while still being cautious and, really keeping risk in mind. So yeah, we've got, like you said, we've got their official standalone and consolidated financial results. We've also got those, independent auditors' reports that are basically giving those numbers a stamp of approval. And we've even got an investor presentation that's really highlighting a lot of the achievements. And like you said, even the notice about the board meeting where all this was actually discussed.
it's like a financial detective starter kit. And I think the first thing that really jumps out at me is just the sheer growth that we're seeing. Their assets under management, their AUM has shot up by 18% compared to last year. So that's a pretty big number. We're talking about a whopping 10,463 crore rupees. And again, this is just for Satin Creditcare itself, not even counting the subsidiaries.
Right. Yeah, that's a massive number, especially when you kind of, think about all the challenges everyone's been facing. I mean, you remember those heat waves and the floods that hit parts of India and, even things like elections and certain regions can really disrupt things. And, Satin Credit Care actually specifically mentions all of these challenges right in their investor presentation.
So that really makes you wonder, right? Like, how are they still managing to pull off such strong results?
Well, they're not just writing it out, they're actually taking action. They're really bolstering their leadership in those areas that were the hardest hit. And they're putting, basically more boots on the ground by adding staff. And they're even tightening up their process for approving loans just to make sure that, things stay on track.
So they're being super cautious. They're not just like, handing out loans left and right.
Exactly,
Yeah.
exactly. They've even decided to, kind of temporarily pause lending to people who are brand new borrowers in certain branches. It's a smart move. It's kind of like, tapping the brakes a little bit just to make sure that everything stays stable and sustainable.
And that kind of reminds me, their capital adequacy ratio, or CRA, that's sitting at 28.8%. That sounds like a good thing, right?
Oh, absolutely. Think of CRR as like, financial safety net. It basically shows how much of a buffer a company has. To be able to kind of, absorb potential losses. So a higher CR basically means they're in a better position to weather any kind of unexpected problems. So yeah, 28.8% is really good. It's well above what the regulations actually require. And it kind of tells us that, Satin Credit Care is managing their risk really carefully.
Well, that's good to know, especially with, kind of all these new regulations coming into play in the whole microfinance world. I mean, you've got things like the MFIN guardrails. Those are those guidelines that were set by the Microfinance Institutions Network. And then you've also got the Satin Creditcare guidelines, which, they're really aiming for responsible and ethical lending practices. That sounds like Satin Creditcare is already kind of, ahead of the curve here.
Yeah, they're definitely taking compliance very seriously. I mean, their investor presentation really dives deep into their whole lending strategy.
Yeah.
And how much overlap they have with other lenders. So they're being really transparent about it, which is always a good sign. It shows that they're really trying to, be in line with all these new industry standards.
And it doesn't seem to be hurting their bottom line either. They've got a standalone profit after tax of 144 crore rupees for the first half of this fiscal year. So that's a jump of 34% compared to the same period last year. So that's pretty impressive that they're managing to balance this responsible lending with, such strong financial performance. But, I've heard that Satin Creditcare isn't just all about microfinance anymore.
You're right. They're not just sticking to one thing. They're branching out, into areas like housing finance and loans for what are called micro, small, and medium enterprises, or MSMEs. And they're doing all of this through their subsidiaries. And this is a key takeaway from these results. They're not content with just being a microfinance company. They want to offer a whole range of financial services. It's like they're trying to become that one-stop shop, for everything finance, especially in those rural areas.
It sounds like they're really evolving. And their subsidiary, Satin Housing Finance Limited, or SHFL, that's seeing some pretty impressive growth too, right?
Oh, yeah, definitely. They've hit a 50% year-on-year increase in their assets under management. And they've reached 850 crore rupees. So that's a really strong sign that their whole diversification strategy is actually working.
So it's not just like, a side project for them. They're really putting their weight behind it.
Absolutely, yeah. And
Yeah.
what's really interesting is their move into the tech world with Satin Technologies Limited. They're developing software like human resources management systems or HRMS and platforms for managing loans. I mean, this is not what you typically think of when you hear microfinance company.
It's a fascinating twist. It suggests they're not just thinking about today, but also about the future, especially how technology is going to reshape, the whole microfinance landscape. And they're not keeping all of this, tech stuff to themselves. They're offering these solutions to other businesses too.
Yeah, that's a smart move. They're basically leveraging their own expertise to, create another revenue stream.
Mm.
And it could potentially even position them as leaders in the whole microfinance technology space.
Talk about thinking ahead. But with all this focus on growth and all this technology, have they kind of forgotten about the people they serve?
Not at all. They're still very much connected to the community. They've got all sorts of initiatives, like things that support education, workshops on financial literacy, to really empower people to make informed decisions. And they're even doing flood relief efforts to help out during those tough times. And, all of these things really highlight the social impact of all their work.
Ah, that's really heartwarming to see. It's nice to see that they're not just focused on profits, but also on actually making a real difference in people's lives.
That's a really crucial point. They're proving that financial success and being socially responsible can go hand in hand.
All right. Well, that gives us, a really good overview of Satin Creditcare's progress and where they're headed. So are you ready to dive into the nitty-gritty of their financial statements?
Absolutely. Let's see what these numbers really tell us. Okay, so let's dig into these standalone financials for Satin Credit Care. And remember, this is kind of like looking at their solo performance, right? Without their subsidiaries. It helps us really understand, like, the core strength of that microfinance business.
Yeah, that's a good point. I always find it a little easier to kind of start with the core business, and then we
Wow.
can see how those subsidiaries kind of add to the whole picture.
Yeah.
So when we look at their profit and loss statement, like
Yeah.
what are the standout numbers there? What really catches your eye?
Well, their standalone revenue from operations for this quarter, it's pretty healthy. It's 60,045.90 lakhs.
Hmm.
And to put that in perspective, that's actually a pretty big jump from the same period last year, which was 49,169.32 lakhs. So it's a clear sign that their main business, that microfinance, it's growing really steadily.
Okay, so they're bringing in more money, which is great.
Yeah.
But of course, revenue is only one side of the story, right? What about their expenses? Have they been able to keep those under control, especially while, they're expanding everything?
That's the key question. And the answer is, well, it's a little complicated. As you'd expect with any company that's growing, certain expenses, they're going to go up. So for example, their employee benefit expenses, those have risen to 12,415.11 lakhs this quarter, compared to 8,835.41 lakhs, the same time last year. But that's natural. More business usually means you need more people to handle everything.
Right, right. That makes sense. It's like, if you open up a second store, you're going to need to hire more people to work there. So what about other big expenses they have? What else are we looking at?
Well, finance costs are a pretty big part of, how they operate. I mean, since they lend money, right, they also have to borrow money to, to fund those loans.
Yep.
So their finance costs naturally have also increased. They're up to 24,268.11 lakhs this quarter, compared to 20,031.31 lakhs last year.
So, okay, expenses are going up, but hopefully not faster than the revenue. So what does their profit look like after you take all of these costs into account?
Well, this is where it gets pretty interesting. So despite these rising expenses, their profit before tax is still really impressive. It's at 5,742.51 lakhs for the quarter. And after they pay their taxes, their net profits, that's profit after tax, that comes in at a very healthy 4,155.78 lakhs.
So even with all these increases in their expenses, they're still making a good profit. That shows they're really managing to kind of strike that balance, between growing the business and keeping those costs under control. Now I'm curious about their assets and liabilities. So what can you tell us about those?
All right, so looking at their balance sheet, their cash and cash equivalents, that really jumps out right away. They've got 90,920.86 lakhs in cash. And that's a lot more than they had at the end of the last financial year. Back then it was 35,630.21 lakhs.
Wow. Okay, so that is a lot of cash on hand. So what does that actually mean for them strategically?
Well, having a lot of cash like that, it gives them a lot of flexibility. It's like having a really nice, comfortable savings account. It gives them a cushion to deal with anything unexpected. Like those economic ups and downs we were talking about earlier. It also means that they're in a great position to take advantage of any new opportunities that might pop up.
So they're not just surviving, they're thriving and ready to, just grab any opportunities that come their way. Okay, so what about the other side of that balance sheet? What about their liabilities? What do we see there?
So a big chunk of their liabilities that comes from borrowings, which comes to 5,051,865.08 lakhs. I know that sounds like a huge number, but you have to remember that for companies that are in the financial sector, borrowing money it's a normal part of how they do business. That's how they get the funds to be able to lend money to their customers. And they also have a pretty significant amount of debt securities, which is 1,070,938.90 lakhs.
Wow. Okay, so that's a lot of debt. Should we be worried about this?
Not necessarily. Remember, borrowing it's just part of how their business model works. The important thing is that they're managing this debt well and that they've got enough assets and income to be able to comfortably pay it all back. Think of it like taking out a mortgage to buy a house. It's a big loan, yeah?
Yeah.
But as long as you have a steady income and you can make those payments, it's manageable.
Okay, that makes me feel a little better. And it sounds like, based on their strong capital adequacy ratio and, how consistently profitable they've been, like we were discussing earlier, it sounds like they're doing a pretty good job managing it. But I know some of our listeners might be thinking, okay, these numbers are impressive and all, but what do they actually mean for Satin Credit Care and the people they're trying to help?
That's a really great point. Let's bring this down to earth a little bit.
Mhm.
So imagine, there's this woman in a rural village, and she's got this dream of starting her own small business. Maybe she wants to sell, vegetables that she grows, or maybe beautiful handicrafts that she makes. But she needs a small loan to get started, right? But traditional banks, a lot of times they hesitate to lend to people like her, especially if they don't have any collateral or any credit history.
And that's where Satin Credit Care comes in, right? They fill that gap and they provide that really crucial financial support that helps those individuals and helps those small businesses actually get off the ground.
Exactly. That small loan, which we see as an asset on Satin Credit Care's balance sheet, that could be the thing that unlocks this woman's potential. It helps her build a better future for herself and her family. And as she successfully pays back that loan, that contributes to Satin Credit Care's revenue and their profitability, which then lets them help even more people just like her. So it's really like this beautiful cycle.
It's really inspiring to see how these numbers can translate into a real world impact. It's empowering individuals, it's empowering communities. It's not just about financial growth. It's about positive social change. Okay, so now let's shift gears a little bit. Let's look at their consolidated financials. So now we're bringing their subsidiaries into the mix. Satin Housing Finance Limited and Satin FinServ Limited. This is going to give us a wider view of how they're performing. Okay, so now we're looking at these consolidated financials. And like we said, this brings Satin Housing Finance Limited and Satin FinServ Limited into the mix. So I'm really curious to see how those subsidiaries are actually contributing to the big picture. What are the key differences that you see when we compare these numbers to those standalone numbers that we were just talking about?
Well, I think the impact on their revenue is pretty clear. So when we look at it on a consolidated basis, their total revenue for the quarter, it jumps up to 65,690.03 lakhs. And if you remember, the standalone figure was 60,045.90 lakhs. So you can really see that those subsidiaries are adding a lot to Satin Creditcare's top line.
Yeah, so it's not just like, side projects or anything. They're really pulling their weight and bringing in some serious revenue. And does the same thing apply when we look at their profitability?
Oh, absolutely. So the consolidated profit before tax for this quarter, that comes in at 6,157.52 lakhs, compared to the standalone figure, which was 5,742.51 lakhs. So really reinforce that idea that, their strategy to move beyond just microfinance, it's working really well financially.
It really seems like they're hitting that sweet spot where they're expanding what they offer, but they're also keeping those financials really strong. But it's not all about the numbers. So what does this diversification actually mean? for their overall mission? And what does it mean for the impact they're having on the communities that they serve?
Well, that's where things get, I think, really exciting because by, offering more than just those microloans, they're able to meet a lot more of the needs in those rural communities. So think about it. Someone who, maybe started with a small microloan to get their business going, eventually they might need a bigger loan, maybe to, fix up their home or maybe to, expand their business.
Sure.
And now Satin Credit Care can be there to help them, at every step.
Yeah, it's like they're growing alongside their clients. They're providing those right financial tools at each stage of their, development. It's really a beautiful thing to see a company that's so in tune with what their customers actually need, as those needs change. And this kind of ties back to their social impact.
Right. For sure. It's a much more well-rounded approach to financial inclusion. It's not just about making sure people can get credit. It's about giving them the power to build a better future step by step. So Satin Credit Care, having this, this wider range of things they offer, it lets them make a much deeper and a much more lasting impact.
And when we look at their consolidated balance sheet, we also see some pretty interesting things there. So their total assets have grown to 11,017,627.84 lakhs. And, a big part of that is their loans, which makes sense, right? Considering, they're in the lending business.
Right. And as you'd expect, their liabilities on this consolidated level, it also shows that they've had to borrow more to keep up with all this growth. But like we talked about earlier, they've got that strong capital adequacy ratio, and they're consistently profitable. So that makes us feel pretty confident that they're handling all this debt responsibly.
So as we wrap up our deep dive into Satin Creditcare Network Limited, what's the big takeaway here? I mean, they're dealing with a really complicated economic environment. They're embracing all these new technologies. And they're expanding everything they offer to basically become, this one-stop shop for financial services for rural India. It's a pretty remarkable journey to watch.
It is, and it brings up some really interesting questions. I think their move into technology, with Satin Technologies, that's especially fascinating. So how is this, this combination of technology and microfinance? How is that going to change the industry in the next few years? Could technology actually be the key to, making financial inclusion even better, not just in India, but everywhere? These are the kinds of questions that are worth thinking about as we keep following Satin Credit Care's story and the positive impact that they're making on the communities that they work with.
Such great food for thought. Well, thank you for joining us on this deep dive into the world of Satin Creditcare Network Limited.